Stellantis shares tanking today, down well over 20%. That's after the company said it's posting a $26 billion write-down. This is the company behind brands such as Jeep, Ram, and Dodge. And it says the write-down comes as it looks to shift its electric vehicle strategy. Let's get more from Tom Narayan, lead global auto analyst at RBC Capital Markets. Tom, thanks very much for joining us. Now, I'm still trying to figure this out. It's not all about electric vehicles, is it? But is the bulk of the write-down related to that?
Yeah, the vast majority of it is related to EVs. We saw something similar, right, happen at Ford, took a very similar quantity write down. GM's was a lot lower, but yeah, the vast majority is related to EVs.
And is North America the core problem with EVs, or have sales been weaker, for example, in Europe?
Yeah, it's predominantly North America. You know, we've seen obviously a policy shift. Also, just EV demand has certainly slowed. There's a lot of causes to it as well. I think folks maybe got ahead of their skis post-pandemic, a lot of stimulus. And yeah, like I said, policy shifts. The used EV market is red hot, so people can find better deals there. But just in general, I do think companies maybe got a little ahead of their skis in the US. Now we're seeing these companies kind of adjust that.
I mean, Stellantis, they don't have a liquidity problem, though, I think your analysis indicates. They can. This is painful, but they can take it.
Yeah, actually, I think most of the reason why we're seeing the stock react so negatively is less to do with the actual write-down. In fact, if you adjust for some accounting differences between Europe and the US, it's actually a similar amount that Ford took. It really has to do with their guidance they gave for 2026 numbers. They're calling for low single-digit profit margins. That was surprising. I think the market was expecting mid-single digits. So I think that's the stock reaction. To your point, you're right. They have $46 billion of liquidity, bank availability. Numbers are supposed to improve next year. So it's not necessarily a cash problem, but one more of expectations coming in below what folks were hoping.
So Stellantis formed, of course, in 2021 when the French PSA Group combined with Chrysler. Their brands, or Fiat Chrysler, their famous brands, also include Fiat, Citroën, Alfa Romeo. Can you remind me, which is North America or Europe significantly more important to them? Can you give us a rough breakdown of the sales?
Yeah, this is really a North American story. 40% of their operating profit. Europe is probably more like 30%. So yeah, North America really drives the profit story. Think Jeep, think Ram. What has happened though in the prior to this current management team, I think they took pricing a little too far. Maybe are underinvested in the business. So now this is the new management team coming in and trying to right size things and hopefully kind of reset. That's the word they used quite a bit on today's call, and try to bring them back to kind of those storied brands back to where they used to be.
I do see a lot of Jeeps around Toronto. Is that brand doing well, generally speaking?
Well, it is and it isn't. I do think they took a little too much price. Jeep Grand Cherokees cost a lot more than when I was a kid. But that said, a lot of it is just product availability. The regular Cherokee, the hybrid version, is coming in the sweet spot, right? That competes against the Toyota RAV4 and the meat of the U.S. auto industry. They haven't had a product in a few years, so they're finally going to have one. It really will become availability in dealers. Lots starting in March. So their hope is that kind of changes the paradigm here. You see more Jeeps on the road at that point. And their hope is maybe that demand can kind of come back in, and whatever damage they did by taking price too far may be able to get fixed with what management wants to change.
But you are a hold or a neutral right now on Stellantis. Do you think it's too early to be going into the stock?
Yeah, I mean, I actually didn't mind so much the large charge they took. It's more about the guidance they gave on the financials. And they're saying mid-single-digit revenue growth, but only low single-digit EBIT margins. It does make me a little bit worried about tariffs. about FX, about DRAM, demand. I know they have this Jeep Cherokee launching, but we need to see if people buy it. So I'm a little bit concerned about why they gave such kind of lowballed guidance, but it could just be conservatism. It's a new CEO. Maybe they want to reset the bar, create a level playing field where they can actually be victorious. But at this point, I do think it's a show me story. So that's what they got to do. They got to show it to me.
Always great to hear from you, Tom. Thank you very much indeed. Tom Narayan, a lead global auto analyst at RBC Capital Markets.